All right. Welcome, everybody. Welcome to Captain's Table. For those of you that I haven't met, my name's Tony Hall from Navigator Consulting. I specialize in business improvement and strategy, sit on the boards of recruitment companies and help with business growth, as well as running Captain's Table and now also Consultants Table, which we run in conjunction with Adele Last, who many of you have met. And we're going to be doing a big summit for Consultants Table coming up in October, and more on that later. But yeah, welcome here today. Thank you very much, everyone, for joining us. Captain's Table is our monthly owners and leaders group where we invite top-level speakers to come and share great information with us. It's brought to you with the great support of our sponsors. Mainly JobAdder, and I'm very pleased to welcome Martin, the new CEO of JobAdder, who we're going to be hearing from briefly a bit later on. He's going to share some market knowledge on our topic of the state of the recruitment industry. Also, very big thanks to A Positive. Cameron and Danny are joining us today. They've been great supporters of Captain's Table and help us with the running of it and sourcing good speakers and contributing to the content. Also, we've got Cameron Martin and his team from William Buck, chartered accountants, on the call as well. And we have Michael from Digit Pro, who does bookkeeping for the recruitment industry, and also Maya, who does offshore staffing for the recruitment industry also. So thank you very much to all our supporters. Thanks for our repeat members that keep coming back to Captain's Table. It's going to be a really exciting one today, and it's with great pleasure that I'd like to introduce two people from IBISWorld. Now, IBISWorld are a world-leading research company. Their logo or their slogan is "Knowledge is power," and it's certainly true. Whereby they've provided over the years lots of really good information, not only for us to be guided on what's happening in our industry, but also to guide us in what's happening in our clients' industry and in those sectors that you specialize in. So now, more importantly than ever, we need to understand what's going on. You need to be trusted advisors. You need to know what's happening in your market segments so that you can consult as well as recruit in those industries. So I'd like to very much welcome, first of all, Jane, who's going to speak a bit after Jason. And I'm going to be in a second handing over to Jason, who's a senior analyst at IBISWorld. He's constantly quoted in the media around Australia, and very, very renowned as a research analyst. And he's going to share some insights into the state of the broader economy and the state of the recruitment industry as well, which now more than ever is so important for us all going forward. And then after Jason and Jane have spoken, I'm going to be drawing on three other people as a special surprise for you that are going to be sharing some unique industry data as well to also help you with some an update on where the market's at and where it could possibly be heading. So thank you everyone for being here. Thank you, Jason and Jane. And Jason, over to you if you want to unmute yourself and share your screen for everybody.
All right, hopefully you can all hear me. I'm going to have to go sharing my screen now. Share. Okay. Tony, can you just let me know if you can all see the first slide of the presentation?
Yep, we're all good. And if anyone has any questions, throw them into the chat box. And if we can't get back to them, we'll handle them later, and or Jason can email you later. Thank you, Jason.
Excellent. All right, so let's get started. So as Tony mentioned, my name is Jason, and I'm a senior industry analyst at IBISWorld. I've been invited to present to you today about the recruitment industry, including its past performance, current dynamics, and the growth outlook over the next 5 years. We'll also have a look at the performance of the downstream markets that recruitment firms really rely on, and the role of technology disruption. So let's get started. Go to the next slide. There we go. Okay, so the recruitment industry has faced two vastly different operating environments over the past years. The chart you can see here on the screen is made using information from the IBISWorld database. Now, as you can see, over the decade through 2018-19, the industry exhibited strong growth in both revenue and employment. However, the COVID-19 pandemic has effectively wiped out a decade's worth of growth and sent employment and revenue back to similar levels they were at in 2010. Zooming in on the years leading up to the COVID-19 pandemic, we can see low unemployment and positive business confidence were driving solid revenue growth. Industry revenue rose from about 13.3 billion in 2016 to a peak of 16 billion in 2019. Now, during this period, a number of new enterprises entered the industry. New firms were targeting niche markets and wider geographic regions, which contributed to the industry's rising employment. The industry was highly competitive during this period with extensive internal competition among recruitment firms. And this contributed to lower profit margins, which accounted for about 4.2% of industry revenue on average in 2019. Now, in addition to rising internal competition between firms, there was also rising competitive pressure from competing online business networking sites, such as LinkedIn and Seek. And this also hindered the performance of some recruitment firms. Now, these online channels have been something of a double-edged sword for the recruitment industry. Online job placement and search technologies have aided industry productivity by enabling recruitment firms to match prospective employees with suitable jobs and do it faster and with less effort. However, online channels have also contributed to higher external competition by allowing client firms to completely bypass the industry and conduct their own recruitment in-house with minimal effort and expense. Now, as a result, competitive pressure for recruitment firms has been high and profit margins have been limited. So now let's have a look at the actual impact of COVID-19, starting with the headline numbers. So for the recruitment industry, and all these numbers are relative to the peak of 2018-19, revenue declined by 10.9% in 2019-20 and is expected to decline by a further 19.7% in 2021, and that is a huge drop. This represents a drop of about $4.4 billion of revenue. Recruitment industry employment has declined by 20%, and that represents the loss of about 36,000 jobs. Industry enterprises have declined by 16%, representing the loss of 1,200 businesses. And average industry profit margins have collapsed from 4.2% of revenue in 2018-19 to 2.2% of revenue in 2020-21. Let's now turn to how COVID-19 has impacted the key economic drivers that underpin the performance of the recruitment industry. So starting with unemployment, when the national unemployment rate increases, competition among employers to recruit staff can decline as fewer businesses look to hire additional workers. The primary driver of the decline in recruitment revenue over the past year has been the surge in the national unemployment rate caused by COVID-19. Now, the rate of unemployment rose from 5.1% in 2018-19 to 8.4% in 2020-21. That's our forecast. But the rate of unemployment could increase beyond that current forecast that we have based on how long Victoria takes to handle its second wave of COVID-19 cases, as well as how long international travel remains restricted. Now, although government assistance through JobKeeper and JobSeeker has provided a lot of support to the economy overall, the benefit for recruitment firms has been pretty limited. Potential industry clients are reverting to their existing employees during any recovery out of lockdown restrictions. Very few are engaging in investment in new productive capacity and expanding their labor forces. And on top of that, the ones that are bringing recruitment in-house in order to minimize non-core operating expenses amid unprecedented economic uncertainty. Now, looking at business confidence, COVID-19 has led to an extremely negative business confidence environment, which is expected to persist throughout the current financial year. State lockdowns have curtailed economic activity, dissuading businesses from hiring staff. But the real damage from state lockdowns has happened recently in the wake of Victoria's return to restrictions in recent weeks. After originally demonstrating signs of a comeback the idea of states bringing back restrictions has further decimated business confidence and really made them wary of investing too heavily in new productive capacity or new employment out of a fear of returning to lockdown conditions and not being able to sustain that, being stuck with that cash flow drain. Now, simmering case numbers in New South Wales are an ongoing threat in this regard, and that's really limiting any rebound in business investment. An additional factor that is limiting business investment and undermining confidence is trade tensions between Australia and China, our largest trading partner. Now, this is a factor that's not really talked about a lot because everyone's so preoccupied with COVID-19. But that trade relationship is significantly worsening. We've been seeing a lot of trade roadblocks emerge over the last 6 months. And to date, most of that disruption has been limited to the agriculture sector. So goods like, beef and wine and barley, which has had a limited impact on the recruitment industry. However, any further escalation of that trade relationship and trade barriers outside of the agriculture sector could be a big threat for recruiters. Now, a note about just government stimulus. Unprecedented fiscal stimulus measures have been brought in and they've partially moderated the overall decline in business confidence. However, the current rate of government support is simply unsustainable and will have to be scaled back over the next 6 months. Business confidence is likely to take a hit at the end of this month when JobKeeper is reduced at the end of September. And it's also likely to take another big hit when JobKeeper is completely removed in March next year. Now, for this reason, the rebound in business confidence is expected to be slower and weaker relative to the recovery that we saw in the wake of the global financial crisis. And just a quick note here about our forecast for overall economic growth. So IBISWorld currently expects that the economy is going to shrink by 2% this year, and that represents the first recession in Australia in 29 years. We currently expect GDP will begin to grow again in the second half of this year, so after Christmas. But I need to stress here that this forecast is highly dependent on vaccine progress and availability, and that is simply an unknown factor at this stage. So now turning to the outlook for the recruitment industry. Recruitment revenue is forecast to grow at an annualized 3.8% over the 5 years through 2025-26 to reach $14 billion. Growth is projected to be stronger early in the period as demand jumps after the effects of COVID-19 dissipate. But it's going to slow down again in the second half of the outlook period as the industry continues to mature. Positive economic drivers, including further growth in the size of the total labor force, for example, are likely to support industry revenue over the next 5 years. However, as the unemployment rate is expected to remain elevated, fewer client businesses and other organizations will likely require the industry services to fill vacant positions. Recruitment firms are likely to expand their service ranges over the next 5 years to retain a competitive edge over online competitors. These services are likely to include administration, staff selection, payroll support, work cover claims, and so on. And we'll get more into that when I talk about technology in a few minutes. Businesses are also likely to retain recruitment needs in-house. Businesses will bring their own recruitment processes in-house and not outsource them to recruitment firms until COVID-19 passes. And that's going to create a really difficult operating environment for recruitment firms over the next 12 months. We really don't expect the industry to return to real growth until 2021-22. Over the next 5 years, recruitment firm profit margins are projected to recover. However, with many companies already operating in the industry and intense competitive pressure, profit margins are expected to remain limited throughout the next 5 years. So turning to the next slide, we can see here a breakdown of recruitment revenue by major market. Now, you can see the recruitment industry is exposed to most sectors across the economy. Over the next 5 years, 3 of these sectors are expected to provide significant sources of growth for the recruitment industry. And these three are highlighted here, being healthcare, construction, and professional services. So I'll take a minute just to go through each of these briefly in turn and discuss the growth outlook for each of them. The health services sector is forecast to continue growing strongly over the next
they can leave it there for as long as they want.
Oops. Sorry. The health services sector is forecast to continue growing strongly over the next 5 years due to Australia's aging population and the increasing prevalence of many chronic diseases. General hospitals are projected to account for much of the subdivision's growth. And revenue for the health services sector is projected to increase at around 2% per year over the next 5 years. And likewise, we're going to see employment grow at a similar rate. Now, I should mention the extensive use of part-time and casual staff in this sector is also a growth opportunity for recruitment firms. We're simply going to see a lot more employment in this area because there's just more people that need to be taken care of. Turning to construction, revenue for the construction sector is forecast to recover with revenue rising at around 1.6% per year over the next 5 years. And we're going to see employment grow slightly slower than that at about 0.9%. Now, new investment in a range of construction projects are really likely to spur growth in this sector. And here we're thinking about like investment in new mining projects, new renewable electricity generation projects, the rollout of the 5G telecommunications network. There's lots of big projects on the horizon which are likely to create big employment opportunities in this sector. And governments, both state and federal, are expected to ramp up investment in public construction projects to really stimulate the economy and recover from COVID-19. In particular, landmark transport projects are likely to dominate the infrastructure landscape over the next 5 years. And finally, professional services. The professional services subdivision is projected to expand over the next 5 years as capital expenditure increases across the business community. And here we're talking about research and development, growth in the public sector, and also private non-residential construction. Sector revenue is forecast to grow at around 3.1% per year over the next 5 years. A trend towards offshoring of professional services is expected to drive a transition away from low-value work in the professional services industry. So here we're thinking about things like bookkeeping, for example, which can be more efficiently completed by cheaper workforces overseas. Therefore, professional services firms are really expected to focus on the work that they can do in Australia that can't be substituted away to overseas competitors. So that means that professional services firms are really going to focus on employing highly skilled and specialized staff that they can only find in Australia. And this will require employees to hold more qualifications, more experience, and will also require greater average wages across the industry. Now, a note here about technology disruption. So the recruitment industry is exposed to a significant level of technological disruption, which is expected to accelerate over the next 5 years. Industry operators are only just beginning to access the enormous potential of big data analytics. Individuals, especially younger demographics, have put unprecedented levels of information about themselves online. And this has enabled recruitment firms to identify candidate personalities, experiences, and preferences, and sort candidates for the optimal match. And they can do that faster and more efficiently than ever before. But a critical note for industry operators, so recruitment firms, is that the analysis of this data is much more efficiently completed by computers rather than humans. Basically, a lot of these tasks can be automated. So as a result, the business models of recruitment are changing, where the need for in-person screening is in decline, and the focus is turning to software design, data analysis, really making the data work for you rather than having to do the hard work yourself. So the industry is currently at a transition point as the true capabilities of technology in this space are really still in their infancy. However, this transition is expected to accelerate over the next 5 years, and businesses need to be prepared to adapt to that. And finally, just to wrap up, I've got 5 key success factors here. This is something that IBISWorld does for every industry that we analyze. We pick 5 of the really core things that firms need to focus on in order to succeed over the next 5 years. So just to briefly run through these, firms really need to be able to communicate effectively with both hiring businesses and candidates. And you need to use the channels that those businesses and those candidates actually use. You need to be able to promote your service as well. You need to be able to adapt to new technologies and not wait for those technologies to make you irrelevant. And finally, you really need to be able to rapidly respond to changing market dynamics. Now that brings me to the end of my presentation. So thanks for all your time. And I will now pass over to Jane.
Okay, Jason, thank you very much. If anyone has any quick questions for Jason while he's here, please type into the chat and I might be able to unmute you. But thanks for that very, very succinct summary, Jason. Over to you, Jane.
Thank you. I'm just going to share my screen. We are an online platform, but I'll apologise because I'm not very tech savvy, so bear with me for a moment.
It's all right.
Share. So
we'll be sending a copy of the presentation to everybody as well, just in case you missed everything. You look good there, Jane. All good.
All right, give me a moment.
Just while we just got a quick question in while Jane's doing that for Jason. From Jason Elias, if you're starting a recruitment business today, what would be your main focus, Jason, knowing what you know?
If I was starting today, I'd really be focusing on, like I said, the growth industries. You really want to look at the spaces of the economy that are growing. And to my mind, a lot of that comes from the digital transformation. So we're looking at startups and new businesses with new operating models. The recruitment market is already quite mature in Australia. So you really need to be able to adapt to that by going to where the growth is. So like I mentioned, you really want to be looking at growth opportunities in health, construction, professional services. And you got to be creative with the markets that you're trying to get in touch with. You can't really do the same thing that other people have been doing before you because you just won't succeed. There's already better players out there. That's just putting it shortly.
No, that's good. And just another quick one before Jane comes on. You didn't mention technology as a growth sector. We just got a message through on that. Any comments on technology itself? Because that seems to be still doing quite well out there.
Technology itself is a huge growth area, but I should mention the reason why we didn't really talk about it in particular is the way IBISWorld functions, and I'm sure Jane will go into this further, is we discuss our industries and sectors based on like the ANZIT catalog, and Jane can explain what that is. So there's no such thing in IBISWorld terms as the technology sector because all sectors use technology. So it's more of a broad catch-all term. So instead you want to look at the sectors where technology is really being applied in new ways. And that's kind of what I was getting at before, which is it's not just, you can't just think in terms of technology. You got to think about who's using that technology for what purpose and how efficient is that and things of that order. Anyway, I might pass over to Jane now because unfortunately I need to get running. I've got a meeting I'm about to head into, but anyway, it was nice presenting to all of you and thanks for all your time.
Thanks, Jason. Okay, Tony, you guys can see my slides?
All good, Jane. Thank you. Thank you, Jason.
Great. Well, I want to start off with a bit of a public service announcement. I'm having to follow an act like Jason's, who is so eloquent. I'm not as polished and refined. Jason does a lot of TV and media and is trained. So I'm just going to preface that there. I'm your everyday plain Jane, so bear with me, and feel free to shoot through any questions as I present. What I wanted to do today was take you through a bit of an introduction around IBISWorld, share a bit about how we assist and support recruitment firms, and then really give you an opportunity to have a look at the data that we have available on our platform. I'm going to throw to the group, I guess, a little bit later with regards to what you want to maybe see, but I wanted to provide you with an overview of IBISWorld, how we help, and then take you through some data. And as Tony always says, feel free to throw in any questions in the chat as we go along. Happy to answer them as we proceed. So a little bit about us. We are, as Tony mentioned earlier, one of the world's largest industry information provider. We actually celebrate our 50th birthday next year, and we're hoping to be out of Victorian stage 4 lockdown and able to dress up in some gowns and celebrate after 50 years of service to the community. We produce data and insights for the Australian economy, but we also have a global presence. We've got offices all around the world. We most recently expanded into Germany, but our largest office is now in the USA. So we are an Australian family-owned business, but we have got over 400 staff internationally, with the US now being our biggest office, but we always let them know that Australia is home and the boss. And with regards to the US office, they actually were recently quoted by the White House, so they've been letting us know about that. In a nutshell, we, the Australian IBISWorld business, cover about 750 industries. We act as an outsourced research department for a lot of recruitment firms. We're essentially used to, I guess, assist in two ways. One, from assisting firms with, I guess, not having to find this information on their clients themselves, and two, to assist with making business decisions. We are a subscription-based business model, and I just want to highlight that we have got a repeat subscriber base of 94%. I guess where we really help, we can assist, I guess, in 5 areas with respects to recruitment: strategic planning, market mapping, understanding your client sector, in turn strengthening client relationships, and with candidate preparation. Just to drill down a little bit into these different areas. So with respects to strategic planning, a lot of the data that I will show you today is around the employment and recruitment and temporary service space. And I guess data is used to assist businesses with their planning, but also to assist with setting goals and benchmarking how you're performing based on independent data. So IBISWorld doesn't, we have no bias, it's all unbiased because we're not operators in the space. So you can really rely on the numbers to enable you to kind of benchmark and say how we positioned against the historical data that's in the reports. A lot of clients will look to us to understand where their strengths and opportunities lie over the next 12 to 5 years. As Jason mentioned, we include a 5-year forecast within our reports, but also assist with setting the right goals for your business. With respects to market mapping, Tony mentioned this is an area that he's speaking to a lot of individuals on at the moment. So you know the clients that you are servicing at the moment. You might have a specialist, I guess, sector that you might focus on, or you might be a generalist and have, I guess, clients across the board. But where we can help, or where our data can help, is helping you validate if the markets that you're currently servicing, if they are going to be sustainable over the next 12, 18, 24 months, but also identifying new markets. We want to help our clients and, I guess, save time and money in ensuring that they're targeting the right spaces that are going to yield the best results for them. So some of the things that, I guess, when you're reading data, it's important to ask and think about if you're targeting the right markets, how do you currently identify a good market? Because obviously we have 750 areas that we can maybe say that you could focus on, but what's going to be the right fit for you in your business? One of the most, I guess, prevalent conversations we're having with recruitment firms is understanding their client sector. Today, it's not just enough we're being told, understand what the client does, or go onto their website and just have a bit of a read of what's been happening. Clients want to know that they are partnering with someone who is a trusted advisor and understands their space. not just what they do, but the challenges they face. So our data can be leveraged to understand a client's environment and really position you above the competition. Final area where we're probably relied upon is with regards to candidate preparation. We have clients of ours who will print particular parts of the report and include them in a pack to present to their candidates before they enter that interview process to enable them to have the best opportunity at being successful during the interview process. And something I wanted the group to kind of think about is what information you might be arming your candidates with before they're having a phone or face-to-face interview. Within our database, we cover recruitment across a few different reports. We've got the employment placement report, which I will take you through in a couple of minutes. But we also now have a dedicated SME report around employment placement. I've also included 4 other titles there that might be of interest that some of our other recruitment clients tend to have a look at, such as executive search recruiters and online recruitment services. If any of these reports are of interest, feel free to reach out to me offline and I'd be happy to assist you with getting access to any of the information that might be of interest on that list. Before we jump online, was there any questions in the chat, Tony?
Okay, there's a couple left over from for Jason about forecast for the construction industry, but I think we might send them to him later and then get back to everybody on them, Jane, so that you can just keep going. There's another one from Sam. Oh, here Matthew's asked, has IBIS considered employment services around Job Active and DES, for example?
With regards to the construction forecast, that's something that I can maybe cover when we jump online and give you a look into it, because I wanted to show you some of the forecast data that we have and how it can be used. With regards to Job Active, I'm not sure. I can get back to you though.
Oh, okay. And also around, Sam Cochrane asked if in-house recruitment teams, a little bit more insight into the data that said that there might be a move to increasing in-house capability rather than outsourcing, because some of us have seen the opposite, but I guess it depends which sector, right?
Yeah, absolutely. That'll definitely be something that's covered within the report that I will show you today. But what I can do with regards to Sam's query is I can have a chat to the analyst who's written that report, because that's one of the services that we provide is in line with getting access to the reports on the platform. You get access to our analyst team. So what I'm happy to do is, Tony, with that particular query about in-house versus outsourced, find out exactly where it is in the report and then get some, I guess, a please explain from the analyst, which we tend to do for our clients, and share that with the group.
Okay.
Oh, fantastic. Just going to stop sharing this screen because I'm wanting to take you guys into the platform, so it won't be a moment. Okay. Just going to reshare. I think I've done that all right, and you should be able to see a screen now that says IBISWorld and IBISWorld Australian Industry Reports. Yep.
All good.
Great. Okay, so essentially, I mentioned in the presentation we cover 750 industries. So we break down our industries according to the Australian and New Zealand standard industry classification system. So you'll see here, one of the things that Tony and I spoke about before today's session was where the employment reports sit. They sit under the administrative and support services sector. But if we scroll down, we break the sectors down in accordance with the ANZIC code, which is what the government and the ABS use. So these all have different codes. So anything in education is P, anything in admin and support services is N. So if there are any reports of interest, please feel free to reach out, or if you have any questions around that. But with respect to the question about technology earlier and how it's not covered as a sector, Jason was correct. We report on at that ANZIC level. However, now at IBISWorld, we do in fact have what we call specialised industry reports. So they're not sectors classified essentially by the government. However, they are big enough and generating enough revenue to be considered a sector or an industry. And we do have, I'm just trying to scroll and find it, technology as a sector. So apologies for any confusion. So technology is considered a sector. It's just a specialised sector outside of ANZIC. And we have about 13 individual sector reports within that. So one of the actual areas that I wanted to show you today was the growth in technology. So I'm going to run through that a bit later as well. But essentially, if you're in IBISWorld, if you got access to our database, it works a little bit like Google, I like to say, whereby you can do a keyword search. I'm popping in recruitment here, and it starts to populate a list of results for me. And then what you're able to do is have a look at the list of results and see a report of most interest. I wanted to spend some time today in the employment placement report just to understand and I guess explain how it could be used to assist you with any business planning or strategic work that you might be doing. Obviously, being in this current pandemic, we're trying to understand, what does the future look like? What's the present look like? But what this report can do is help you understand some of the key themes that other operators are considering. So if I just head into that report. Tony, can you just confirm that it doesn't look too small? You don't need me to zoom in or anything like that?
No, good enough. Everyone else is okay, I think. If everyone's seeing okay, if you just raise your hand, all good?
Great. Thanks, guys.
All good, Jane.
So, very first thing that we've done is we've recently included an update on the pandemic. We're currently living in it, so what's the impact to the industry? But now more than ever, what we want to do and enable our clients to do is understand how is the industry currently performing and what does IBISWorld think the outlook will be. So Jason covered it there in a presentation, but what the report does is it really gets into some of that more granular stuff like in-house versus outsource. Why is that a theme? It is a theme that we've identified, but where's that coming from? So you can find the answers within the report themselves. But what we do at a very high level is essentially, first of all, capture how the industry has performed and how we're forecasting it to perform over the next 5 years. We talk about profitability, number of businesses, and this is one that I want to kind of stop and pause on for a second because this is telling us that in Australia, there is 7,581 recruitment firms. That number is based off ABS data that we use or the analysts has used for this report. Because any firm that is listed under this code N72 is in employment placement and recruitment, and there's about 7,500. So that tells us that that's the number of competitors in the space. But then what we can do is, I'm assuming, correct me if I'm wrong, Tony, but we've got people who are in New South Wales, Victoria, Queensland, and all over Australia.
Yep, all around the country.
So what you can do is, or what the data can tell you is, of that 7,500 competitors, where are they based? How many are in my state? So if I click into business locations, we're based up in beautiful sunny Queensland, the opposite to what Victoria is today. There's 18% of enterprises that reside in Queensland of that 7,500 number. So that gives you a drill down. New South Wales has about 36% and then Vic with 26. One of the interesting things that I want to share with you guys today was the SME component of employment placement and recruitment. So not only do we produce a report at that level, but there's data available and out there for you to kind of really understand what is happening within the SME segment. Because what we believe at IBISWorld is the trends and I guess the forecasts are different for SME compared to the major players. So when we're looking at the SME component, we're looking at businesses that are $10 million and less in revenue. So here, what we have is, we're taking out the major players and we're looking at the industry. So we're saying that originally the first report said that employment services is worth $15.1 billion. The SME segment makes up $4.4 billion. We then scroll down a little bit further. Of the 7,500 businesses in Australia, 7,069 are considered SME, generating $10 million or less in revenue. In terms of the employment that it offers, of the 150,000 jobs, about 58,000 are in the SME space. A couple of things that I wanted to, I guess, share with you and I guess position where data, as well as IBISWorld data, but data in general can sit and assist with strategic planning is we can help understand the size of a market, understand some key trends, but we've also got historical data available. Available. Just trying to get that historical data to come up. So apologies, I thought that was going to be our first internet issue with a lag. But we've got historical industry data for you to kind of benchmark how have I performed over the last 10 years compared to my peers. Or you might want to look at the last 3 years. So we have a data set here that enables you to look at the year-on-year growth by revenue, but then also understand the year-on-year growth by number of new entrants into the market. So you can see here that over the last 4 years, we've had almost 2% of an increase in the number of businesses and players entering the market. We've got data also available to really assist you with the benchmarking in terms of understanding of the revenue that you're generating. What's the industry's profitability margin and how do we compare? Are we setting the right goals? Are we being too ambitious or not ambitious enough? So you can really use this data to assist with some of that planning. Any questions, I guess, on the strategic planning and the positioning of data with regards to internal use, or any questions on anything I've covered so far? So I want to move on to some market mapping.
Quick one for you, Jane. Quick one from Ross. Is total employment calculated as employees of agencies plus on-hire employees, e.g. contractors, or is it just staff? Great question. So if I go down to, I'm just in the cost structure benchmarks now. If I look at wages, I believe now it covers both casual, full-time, and contractors. I believe it covers, thought it'd be in the wages for us, but no, it definitely covers casual and part-time staff and contractors in that number. And if you, that's a great question, Ross, because if I show you the key statistics, for example, and it actually gives us the number of employment, what we could do is find out from the analyst that breakdown of FTE, part-time, contractors, casual. So that's something, it's not in the report, but it is available in the back end through the analyst team. Okay. Great question. And another question, quick one, is labour hire recruitment included in the data? Great question. Let me just go into products and services. Because they can be classed as employees as well, obviously. Good. No, we've got a dedicated report called Temporary Staff Services, where it talks about labour hire. I think this report, dedicated report, talks about it. We've got 2 employment reports. I'm just taking you through the one, but I think this report here would have the answers for us, Tony, and I'm happy to share that after the meeting and find out exactly where with respect to labour hire. There it is, yes. Yes, there it is. Sorry, I'm having a bit of a lag on internet here, so it came up for you before it did me. I don't know why that was, sorry. No, great. Any other questions? No? Oops, have I just stopped sharing my screen? Sorry, guys. Okay, so I wanted to share a little bit about market mapping. So I guess, how do you currently, I guess what I wanted us to think about was how do you currently target or identify, I guess, the right businesses to try and win business with. Someone highlighted before,
technology is a growing sector for you guys. So we have a tool that enables you to really drill down into finding those right, I guess, areas for you and doing an analysis of understanding where the growth is within a specific sector. So this tool here enables you to look at all 750 industries we report on, but really hone in on a sector of interest. So technology is the one that I'm going to use. And what I guess you can do with this data is really understand where the growth opportunity is. Is this a market? What markets in the technology sector are going to be a good, I guess, area for us to focus on, if at all? So I ran a few examples before the session just so I had them prepared. And I essentially looked at technology. So here I'm going to zoom in a little bit. We're looking at the technology sector, the 13 different areas that IBISWorld's, I guess, written a report on. We're looking, I filtered it by the industries with the highest employment growth over the next 12 months. And you'll see there we've got smart app developers, pay television, online recruitment, software suppliers. So these is looking at technology, the sector, looking at who's going to have the largest employment over the next 12 months. But then what I've included is data on the next 5 years. Is this sustainable growth? If we're looking for short-term wins, then we look at the column for the next 12 months. If we're looking for sustainable growth markets to kind of really focus on, because we're wanting to pick a new niche, a new specialist area, you can use the data, which we've mentioned before, Jason and I, the 5-year forecast. So we work on a 5-year model. And just to give you a bit of confidence in terms of some of the 5-year forecasts that we include, we've got major banks around Australia and the world who are incorporated into their commercial lending. So you can rely upon the data, and it has been, I guess, our algorithms have been refined over the last 50 years. And I'm not sure if the questions come up yet, Tony, but how accurate are your outlooks? That's always one that we get. How often do you get it right or wrong? We did not forecast the pandemic, as I'm sure no one else did. So what we've had to do is now go back and revise our outlooks. But I can tell you that we've got clients who've been with us for 40 years, such as the ANZ Bank, and they've been lending billions and billions of dollars over the last 40 years based on the forecasts. Another one of our major clients is the Australian Tax Office, and no one scrutinises our data more than them. And I'm not envious of the relationship manager who has to deal with their daily inquiries, the two of them. So it is definitely, our data is tested and proven day in, day out, with a lot of client queries and a lot of businesses using it. With regards to the market mapping, you could really use this tool then if there is an industry that is or sector that you've recently had some success in and you're wanting to maybe look at, furthering your opportunity in that area. You can pick any of one of these reports and click into them. And that's where you can really start to, I guess, focus on the last area in which I wanted to discuss with you guys today, which is client engagement and understanding a client sector. It's really hard to be well versed in every single client in our portfolio's industry or market, but I guess the data is available and out there, be that through IBISWorld or other sources. And I think it's really important that you are a trusted advisor when you're speaking to your clients. And this is what the IBISWorld or any data can help you with, really understanding what are some of the challenges that your client might be facing that you can target. I recently had a recruiter I was speaking to say to me, Jane, what I'm finding when I'm speaking to the team is if there are two firms up against each other for the same piece of business, say the fees and rates are kind of on par, it's the one that has the more knowledge or makes the client feel like they understand their world better that is yielding the best result for us. So I really want to know what data can you give me that my guys can include in proposals, in discussions, in even just in pre-call prep. So within every report, we have what we call an executive summary. And that executive summary is literally 3 paragraphs on the past, the present, and the future. And we do that for any sector that we report on. One of the other things that Jason highlighted in his presentation was key success factors. And we do that for every industry. These key success factors almost give you a lens to what are some of the areas that your client might be focusing on or should focus on to help them yield success. So they're great talking points before, again, any engagement, be that a phone call or a meeting. Really great also for prospective clients that you might not be working with at present, but hoping to build a relationship and partnership with. There's a multitude of different data, data and insights that you can pull from this. Just really, relates back to what you like to talk to your clients about, and having a credible source to back you with some independent information. Tony, was there anything you want to add to that? Because I know it was a point of discussion with us yesterday.
Yeah, there was one you showed me yesterday that there was a list of the top growth longer term industries, industries long-term growth prospects that I thought would be very interesting for everybody.
No, absolutely. Yep, absolutely. So let me show that to everyone. And Tony, we want that by revenue or employment? Was it by employment, wasn't it?
Yes, because that's probably more relevant to recruitment agencies, maybe.
All right, so let's go from 2021 to 2026. So essentially what we're looking at here is every single industry that IBISWorld reports on, from rice growing right through down to corporate wellness services, bottled water manufacturing, and we're looking at it through an employment lens and employment growth. So we're looking at the next 12 months, but we've also got the next 5-year forecast here in terms of employment. So I've just filtered it based on 2021. If we were to go to 2024, 25, and I was to filter the largest growing, you'll see that the list changes and litigation funding in Australia goes to the top. So essentially you could use this tool, or this tool enables you to kind of really at a macro high level identify some potential opportunities and markets to target that you would never have thought of before. I'm not sure if anyone's thought of rice growing. That was one that Tony and I had a bit of a chuckle to, but someone might have a client or someone in their portfolio that they might be speaking to, because they've got the largest employment growth over the next 12 months, but that growth carries on for the next 3 years. We then filter according to 2023-24. You'll see again, this list changed. So it's really about, fitting it into your strategic plan that you might be doing at a 12, 24, 36 month level. And we can do that with our outlooks. Anything to add, Tony? I'm missing the two-way conversation, I'll be honest.
No, all good. No, you've done well. And obviously you can't show everything because everyone's in different sectors, but I mean, what you showed us is brilliant. And if you're nearly ready, Jane, I'm going to hand over to 3 others, but yeah, if you just want to round off, then...
yeah, absolutely. I guess just the final thing is, I mentioned candidate preparation. So we offer 5-page condensed versions of our full industry reports that you are able to print and include in your candidate packs and prep packs if you do that. But essentially, this is also great for any client facing or understanding your client's environment, because it looks at internal and external questions and issues that you can raise with them as a point of discussion. But I might leave it there, Tony, and throw back to yourself so you can pass on. But if anyone has any questions on anything I've covered today, please feel free to reach out. Tony will share my contact details. If there's anything that I didn't cover that you are hoping to understand or see, please reach out as well. I really appreciate your time. Thanks, everyone.
No, really good. Thank you, Jane. Thank you very much. Some really, really good information there. And obviously, so much data, and it can be used for business development, new market mapping, check resource allocation, checking the performance of a recruitment business. It's all there. So thank you very much for all the time and effort you put into that, Jane. Okay, now, before everyone goes, we've got 3 really quick guest speakers to add to the discussion today. And I think the first one I want to go to would be, if he is ready, is Cameron at A Positive, who's put together a little bit of information. Now, our supporters have a very unique look at the industry because they've got many recruitment clients and they can really see what's happening from a much broader perspective than most of us can from anecdotal stories from our network. So, Cameron, if I can just find you, and on this massive list of people, then I'm going to hand over to you because you had a couple of slides that you're going to share, and I'm just going to make you co-host now. And if you could just spend a couple of minutes, and then I'm over to Martin and to Cameron at William Buck for a quick share as well.
Okay, thanks for that, Tony. Can you see my screen?
All good, looks good.
Excellent. Thanks for that introduction. And look, for all the economic reasons that Jason and Jane just shared then, credit and risk management's definitely raised its profile over the past 6 months. So that's a topic that we're going to cover quickly today. So it's now much higher on the media's agenda and it's being discussed more frequently at board and management meetings. But being aware of the heightened risk is only the start. So probably the next steps is to make sense of your risk profile and then to have a plan to manage it. So I'll quickly share a dashboard approach that we use to assess risk at that macro level. And then I'll hand over to Danny Marlowe, who'll take you through some tools and some techniques to manage your risk more so and mitigate your risk at a micro level. So this is, as I said, a macro risk dashboard that we use. And it pretty much encapsulates a lot of or some of the data that Jason was talking about before. In this particular example, we look at it at a national view and we focus on the recruitment industry because that's the industry that we target and deal with. But as Jane just shared before, you can adapt this to state views, and clearly there's lots of valuable IBIS data if you wanted to drill down further, sort of using their dashboard or other data. So the 8 key metrics that we focus on, and policies as well sort of intertwine into that, is that we focus on those 8 metrics, and in a lot of ways they're interconnected, as you'd expect. And similar to what IBIS mentioned, we sort of look at the past, the present, and also the predictions in terms of the future. So looking at that in terms of the sources, you can see down the right that most of these sources, or pretty much all of them, are publicly available, reputable sources. A lot of them are government linked. So starting at the top, we've also always known that the stimulus package had an expiry date on them. And starting this month, that's actually they're starting to wind back, etc., in terms of JobKeeper and tax deferrals at the state level. In terms of insolvencies, it's an interesting one that it's 50% lower than they were at the same time last year, despite the fact that there's an increase, a well-documented increase of zombie firms. And all of this can be directly attributed to the relaxed insolvency laws or safe harbour measures that are in place at the moment. But again, we know that that's actually winding up later this month. So payment days on outstanding invoices, it's something that we obviously track frequently given the nature of our business, is that unsurprisingly that's increased. And one of the reputable credit agencies that we deal with, which is Creditor Watch, only last week they released a report that showed that the debtor days had blown out by 342% to the same time last year. So they're now sitting at an average of 49 days overdue versus going back to the same time last year when it was 14 days overdue. We've already touched on unemployment data, and that clearly gets a good run in the media. So everyone's aware that it's gone from 5 to 7.5, and the ABS are talking about it sort of peaking at about 9.25 in December is their expectation. SEEK only last week released their job ads report, their latest job ads report. At a national level, we know that dropped by 29% versus Feb 2020, so just pre the sort of pandemic sort of kicking in. But at a state level, it's obviously there's differences there. It's as low as 1% down in WA, 2% in South Australia, and of course, with what we're experiencing down here in Victoria, it's as high as 55% down. All data that was released over the past couple of weeks. We find that the ATO released some valuable data in terms of payroll. The most recent report that they produced showed that jobs were down by 4.9% and wages were down by 6.2% versus March this year. And finally, and just looking at some sort of market sizing data that we've seen, and I think this is a little bit more bullish than perhaps what we just heard before that Jason shared, but looking at staffing industry analysts, they expect the market to drop by 26%, which certainly isn't bullish, but they do expect it to bounce back by 16% next year is their forecast. So just in terms of that, that's a model or a dashboard that we use to assess risk at that macro level. But I think it's probably best summed up in this recent quote by the Reserve Bank Governor, which I'll just give you a minute to digest and read that. So if that's the harsh realities that we're faced with, we need to focus on ways to reduce our inevitable exposure to late or non-payments. So I'll just hand over to Danny now, and he'll just talk through some of the tools and approaches to help mitigate your risk in that regard.
Thanks, Cam. Look, in invoice finance, we consider there's two risks in collecting out your invoices. How enforceable are your invoices and your customers' ability to pay those invoices? So first, on the enforceability side, to create a legally enforceable debt, you need a documented request for service and confirmation the service has been provided. This means signed terms of business are critical, and purchase orders or requests for work add weight to that. Proof of delivery for temps via timesheet signed off, and perms via some type of acknowledgement that the candidate started or the shortlist has been accepted, for example, is now critical. Just make sure your documentation is as complete as possible. Businesses facing hardship, like the zombie firms that we're all hearing so much about, will do whatever they can to wiggle out of paying. So you need to keep your paperwork tight. On the ability to pay side, credit checking with credit bureaus and other sources to understand the historical financial capability of the client is still critical, but no longer enough. Delving into the location and the industry is now really important. Clearly, certain locations and industries have been hit harder than others. And the situation just keeps evolving. I mean, clearly Victoria is quite a different place than our friends over in the West. On top of that, we recommend desktop research into the business on Google and social media to get a feel for the client's activity levels and offerings. Gives you a good feel as to where that business is at. So that will give you a more comfortable, that will get you more comfortable with your current and prospective clients' ability to pay. But if you want to sleep better at night and more completely remove the risk of bad debt, you can consider a bad debt protection or insurance product. Our clients like the flexibility of a bad debt protection solution, as they can cover individual customers that may be of a higher risk or their entire debtor ledger. So that covers that off. That's us, Tony. Thanks very much for having us.
Oh, Danny, thank you. Cameron, thank you very much as well. Really interesting and really good dashboard and some great ideas. We're nearly finished, everyone, but please stay on if you can, because just two other quick people to hear from. I think I'll go to you, Cameron Martin at William Buck, if you're ready. And if you want to just unmute yourself and talk, or if you need the screen, let me know.
Yeah, thanks, Tony. No, I don't need the screen. Just some sort of observations from what we're seeing in the industry. So I'm a director at William Buck, an accounting firm that's a national firm with offices around Australia. We're seeing strong demand for our services. Our clients are, wanting to see their trusted advisor. They're asking for help. They need help navigating the government incentives, and they're also just asking for our help in all sorts of things. I think a lot of businesses are very keen to make changes. They're looking at implementing technology and just improving the way they're doing things. So we're seeing a lot of demand for that sort of thing. Similar to the other guys, we're not seeing any insolvency activity whatsoever at all at the moment. The government incentives are doing their job and they're holding things up. We're expecting probably leading into Christmas and probably more likely the new year that will change once some of those businesses fall off JobKeeper. And in terms of our recruitment clients, it depends on where your industries and what you're targeting. So some of them that are, doing health and technology, they're doing really well, and some are seeing demand even stronger than what it was pre-COVID, and others are struggling. It also depends on your mix of perm and contractor, and also depends on whether you're eligible to claim JobKeeper. So there were some businesses that had a high contractor book, and their perm business fell away completely. But unfortunately, if they were all in the one entity, they may not have been eligible for JobKeeper because they may not have seen a 30% reduction in their overall turnover. Yet their perm business may have, gone completely, down. Where I've seen others, for example, that they're more perm based, they found it much easier to apply and be eligible for JobKeeper. So that just depends. I think from the doom and gloom days, and this is all excluding Victoria, back in April, we've definitely seen some recovery, and I can definitely see some green shoots coming in. And I think between here and Christmas, it's only going to get better as we go through that period. So interested to hear from others what they're experiencing, but we're seeing sort of green shoots and some positive stuff there. But we're not out of the woods yet. We're in a recession, but that doesn't mean that there's no business out there. So I think you've just got to work hard to get what you can get.
No, very good. Thank you, Cameron, and really refreshing to have an accounting practice that understands the recruitment industry and really keeping tabs on some of the trends that are really important to us all. So thank you very much. Finally, Cameron Buckley, if I can just ask you to unhost yourself so we can go back to the normal screen. I want to quickly ask Martin, who has just taken over as CEO of JobAdder. And Martin, if you are able to unmute yourself, I don't think you needed the screen. And Danny and Cameron, if we can just get your screen off and go back to the regular screen, that would be good. So, all good. Thank you very much. Martin, are you there?
I'm here, Tony.
Oh, Martin, thank you. Look, I'm really, really pleased to have you here. JobAdder have been a great supporter of Captain's Table since the very beginning. And you in your past role at Gumtree were one of our very earlier, you probably might not have known at the time, but you were one of our early supporters as well. And Audrey has been brilliant. She's been to every single meeting. Really good that most of our people here, and you've got a big crowd here today, might not have met you in person before, but great opportunity for you to introduce yourself and then uniquely let us know what you're seeing, because as Australia's largest recruitment management system provider, you've got some unique insights, I'm sure.
Yeah, well, thanks a lot, Tony, for having me. And you're right, I'm familiar with Captain's Table from my Gumtree days. And Audrey, as maybe some of you know, came from Gumtree. She came from my team and has always raved about JobAdder. So I get to follow her into JobAdder. It's been awesome. So I have been just a little bit over a month into the job, so still early days, but happy to be here, happy to share a little bit of information. I know you all have had over an hour now of lots of data, lots of research, lots of content, so like a smorgasbord of stuff to consume. So hopefully there's a little bit more room in your stomachs to take a couple more nibbles. But I think, Tony, you put it pretty well in terms of like that, the data that we can actually provide. It's a good sort of, I guess, sequence, because we started off with Jason from IBIS, who gave a very macro look at the industry, at the economy, at the future of recruitment, and what we can provide, with roughly 2,000 different clients on the JobAdder platform within Australia, is a good real-time snapshot on what we're seeing right now. And I think Cameron put it well, that we are seeing some nice green shoots in the last few months. So what I'll do is, and I don't want to take too much time, I'm just gonna use 3 different metrics. I'm gonna play around with 3 different metrics to share with everybody. They should be fairly familiar, but basically it comes down to what we see in terms of number of users on our platform, the number of job orders that are being put into the platform, and then ultimately how many placements there are. So we'll start off a little bit on the sort of glass half full, or I think, and which is the sort of the bigger picture, what's happened year over year. And this doesn't come at, with any surprises, especially after the stuff that you guys have seen in the last hour. So job orders are down roughly, and if you look at August data within Australia, about 23% year over year. Our users on the platform are about down 8%. And then placements, so those placements of the actual jobs, down about 13%. So again, no surprises, but I think the interesting thing to see is like, okay, how is that trending? So that's when we saw essentially that's year over year, but we've hit the low back in April and May, and we've been coming nicely out of that low in the last few months. So if I look at the August data, again, against those same three metrics, relative to those sort of the low points in April and May, users are up 1% or so since that low. More interestingly, we've got job orders up 70%. So job orders have come up, quite a bit. And as we'll follow with job orders comes the placements, and that's up 42%. So that's showing a nice swing up, and we've seen that the increase is particularly most significant in June and then July. And August has matched July levels. And I think that's probably for a couple of reasons. I think one, it's good to see it sustain some of that momentum, but it's probably the steam has come out a bit with the things that have happened in Victoria and some of the other sort of slowness in the momentum. But still, I think relatively positive in terms of like the overall kind of momentum that we're seeing. A couple more things maybe to throw out there if you guys still have any room left. Placements per job order. So what we're seeing essentially is that the efficiencies have increased. So we've seen about, this is based on our data, so it's a sample, but it's representative, about 0.6 job placements per job order. And that's a nice increase year over year, and what we see on the averages in the past. So of the job orders that are out there, they're getting placed at a higher rate, and which again is probably not a big surprise because it's a relatively soft market with a lot of candidates available. And then jobs per user. So again, the job orders that we have on per user in the platform has also hit a bit of a low. Again, just as a factor that the number of overall job orders have declined back in April, but that's also climbed up almost to pre-COVID levels. So again, so that the overall ratio of job orders that are seen on a per user basis are getting back to almost where they were before. So again, we're not where we hope to be, and that's again not a surprise, but we're seeing some good momentum and some optimism, I think, toward the end of the year. And that's about all I had.
Martin, that was excellent, really good. Thank you very much, and very useful. Great that everyone got to meet you briefly, and thank you very much for sharing with us. So to let everyone get going back to work, I think we'll wrap up now. And I want to thank all our supporters, all five of them that some of them spoke today. And really appreciate you all being here. I hope you found it really valuable, and I will be sending you a copy of the presentation and contact details for everyone. So if you want to explore more, you can on an individual basis, because I'm sure that everyone spoke today would be very happy to be communicating with you and to answer any of your questions that you might have missed. So thank you for all your chat messages to say you found it very useful today. Quickly, we're going to do a big consultant summit. It's a big surprise for you coming up in October, and we'll give you more details on that instead of the monthly consultants table. We're going to do a summit format, and Adele's on video there, and you can see her there. She's going to be spearheading that with a bunch of other guest speakers. And also next Captain's Table next month is going to be all about back office compliance, and particularly useful for your finance managers, your office managers, general managers. A really big health check during these very turbulent times about how all the legislative requirements need to be in place, compliance, all that sort of stuff. That's going to be very useful. It can trip you up. It can cost a lot of money. We're going to be covering that. And that discussion is going to be led by Cole Levander, who many of you know. from his rates calc product. He's not talking about rates calc. He's going to be talking about the back office compliance and everything that can get recruitment companies tripped up and make sure everything's operating efficiently. So look, thank you again, everyone. Thank you all very much for your great attention. Thanks for being here and supporting Captain's Table. And we look forward to seeing you all again next month. Thank you all and see you soon.
Thanks, Tony.